back. You're watching Budget and Markets live on ET Now. Even though budget is a accounting practice, it is a statement of account, but it is often used as a yardstick or a benchmark to gauge the government commitment towards reform and what they are pricing in terms of economic growth. The most important key assumption or the most important key indicator from any budget is the fiscal deficit, and Finance Minister has indicated a rather positive number for FY13. So on that note, let me now bring on board Kalpana Morparia, Chief Executive Officer of JP Morgan India. Kalpana, good evening to you as well. Thank you for joining us. The Finance Minister has indicated that the fiscal deficit will be close to 5.1% of GDP for next year. Do you think that's realistic?
I think the general sense is that probably he's being too optimistic about 5.1. It could probably slip to 5.3 or something like that.
What is your sense when it comes to subsidy assumptions? He's reduced the fertilizer subsidy assumption. The oil number also, I'm not sure how will he achieve it.
I think ultimately he's assuming that he's going to pass on some of the petroleum differentials. Because if you look at diesel currently, it's being worked on a number which is at $90, and the markets obviously is much higher. And even if you don't get a full deregulation, if you transmit some of it, that will help him reduce his subsidy. And that's a reasonable assumption to make, that you can't get full deregulation, but you can get piecemeal increases.
What about the global climate? Do you think this budget does, Punita, very precious little to insulate us from global geopolitical and global risks?
Yes, absolutely. I think, India's trade has increased. International trade is now, significantly more than 50% of its GDP. So the dependence on global economies is significantly higher, which is partly why we're seeing a lower GDP growth right now. And this budget doesn't really make India stand out in amongst other global economies as an investment destination. It doesn't reassure foreign investors that India is going to be able to do a whole lot differently. Of course, the absolute numbers in India are higher in terms of percent, the GDP growth, but the direction is similar as other global economies. So what we were hoping for in this budget was that this would be an opportunity for India to attract foreign investment by doing something radical that would place it, center stage in front of foreign investors. But that's not happened. So I think that the equity markets in India will continue to move mostly in line with global markets.
Mr. Kotak, from a market perspective, do you think this is more like a non-event, and Monday morning when markets will open again, we will be mapping and tracking global liquidity and crude prices?
I think divide the market aspect into two parts. One is markets moving in India based on global liquidity, and that is a very important force, as Punita rightly said. The second part of it is, what are we doing to attract domestic savings into Indian equities? If you look at the mutual fund numbers last 4 years, they're more or less flat. And the Finance Minister has done some signaling that he cares about capital markets. May not be enough, but some of the steps he's taken, whether it is reduction in STT, though marginal, whether it's this Rajiv Gandhi Equity Foundation thing, or the fund thing which he's planning, these are signals that he cares about markets. Maybe he did not have enough leeway to be able to go all the way. On the other hand, if you look at where Indian savers were putting a lot of their money, it was going into gold. And he's made buying gold more expensive from 2 to 4% duty, and that is a pretty significant move. Gold is an extremely unproductive asset. Our entire current account deficit is equal to gold imports. And if you slow that down a bit, it certainly frees up domestic savings for financial assets on the one hand. And to the extent which gold continues to get imported, the government gets revenue.
So you sincerely feel, Mr. Kotak, that for Indian equities to do well, alternates have to do badly?
No, ultimately, it's always relative. When you decide to put your money, if you get higher rate of interest, you'll put it there versus risk assets. If you get gold, which is giving you better returns, you're tempted to put in there. There is a natural Indian interest for real estate. But India is not having the luxury, like the global situation, where money is free. India interest rates are still high, and therefore the saver has options.
Very quickly, Punita, do you think the tone of the budget is slightly more investment oriented, unlike previous budgets which were consumption oriented? So for those who bought consumption stocks, auto stocks, FMCG stocks in the last 2 or 3 years, they've hit a jackpot. Now it's time to change the portfolio orientation because the government orientation is also changing.
Well, the budget is a little bit more investment oriented than it was in the previous years. And, he's given some tax breaks for bonds that invest in, infrastructure-related companies, etc. So there is obviously a focus on those sectors where there had been a slowdown, and so that is good because those sectors will see some stimulus. And in terms of raising service tax in areas that weren't already in the service tax net, he's hurt consumption of the luxury or high end a little bit more. But if you look at some of the schemes that he's put on, which will help the rural sector, so the consumption in the rural sector will still continue. So what we're going to see is definitely investment or sectors that are infrastructure, power, etc., which have been big underperformers over 1 or 2 or 3 years, not over the last 3 months. They've already done very well over the last 2 or 3 months. Those might see again gathering the attention of investors. And then the consumption-oriented stocks, one will have to be more selective because the consumption is targeted more at the middle to low-end segment of the economy.
Irrespective of good budget, bad budget, what is a good place to invest in the current market condition?
I think right now the best place is mutual fund FMPs.
No equities?
I'm coming to that, which give you effective post-tax returns in excess of 10%.
Punita, what about you?
I think the budget was very sector specific. So actually you have an opportunity to pick across sectors this time. And so there are clear sector beneficiaries and some sectors that don't benefit at all. And we talked about it earlier. So within those sectors of power, infrastructure, I would say even banking, recapitalize, the fact that he's going to inject some capital into the PSU banks. And they will also potentially longer term benefit if infrastructure and related sectors grow because they lend a lot to those sectors. So I think those sectors would be clearly beneficiaries, and one would just have to wait for the right opportunity because the markets are quite volatile, and I think you could probably do fairly well if the economy recovers.
Mr. Kotak, I know you hate to answer this one, but do you think in the next 1 year Indian markets will touch a new all-time high?
I would give a view which is more at this point of time, and that is my personal view is markets will be range bound, and we can debate what that range is, but give or take 16,000 to 19,000 Sensex is where I think the markets will keep on bobbing between. And Indian market, people are forgetting, is getting to be much more a bottom-up market. Therefore, you just can't go out and buy the market. You've got to be very picky and choosy. People forget that. Look at the stocks of December 2007, which was then peak of 21-22. Today there are companies whose valuations are higher than that. And there are companies whose valuations are 15 to 20% of that, which means 80 to 85% lower. Therefore, in the last 3 or 4 years, you have seen the marketplace becoming enormously discerning. And if you want to play the Indian equity markets, I think it is a bottom-up stock pickers market, no longer buy India.
I exactly have 20 seconds before a wrap. So, Punita, in 20 seconds, after a 15% run-up this year, are you bullish or are you optimistically bullish?
I think I'm cautiously optimistic still, and I'm, if I look ahead for the next 6 months.
What about you, Mr. Kotak?
No, I would say range-bound, and investors would not lose their shirts, but for supernormal profits, India's macro needs to improve.